introduction to what it's like to move to the suburbs in terms of looking for a home, getting a mortgage and insurance, and kind of just thinking through everything. I'm a mom of four, and we lived in the city for a long time, and we made a move to Greenwich. And it was definitely daunting, but it was fun and it's definitely worth it. So if you're thinking about it, any of us can be a good sounding board for you. Um, my name's Megan Sullivan, and I'm an agent at Sotheby's International Realty, and I live in Greenwich, and I cover all of Westchester and Fairfield County. And so I want to introduce you to Juliana and Lindsay, and Juliana and Lindsay will give you a quick introduction on them, and then we'll take it from there.
Lindsay, I'll let you go first. Go ahead and tell us about who you are.
Sure. My name's Lindsay Scott. I work at Citizens Private Bank. We launched the private bank at Citizens about 2.5 years ago, formerly at First Republic for about 11 years. And we work on a lot of residential lending, construction lending for high net worth clients. So we work throughout the tri-state area, Connecticut, New York, New Jersey. We do Florida, basically throughout the country, but those are a lot of areas of our focus. So happy to answer any questions related to the mortgage process or anything, and I'll go through a little spiel in a few minutes. But Juliana, why don't you take it?
Sure. I'm with Alliant Private Client. I've been with the firm since 2009, and we have approximately, I think, 15,000 people. There's 500 people in private client. I cover the U.S. and outside clients all over the United States and more. And we insure homes and fancy cars or not fancy cars, boats, everything. And just love meeting people and helping them get through this process so they can be in their new beautiful home.
Perfect. Perfect. Yeah, so we'll start. And, just so you know, we specialize in buyers helping make the transition from city living to suburbs, whether it's your first home purchase or, it's your second or third. And we're seeing a lot of buyers coming from the city with mom dummy and just kind of wanting more space, better schools, lifestyle, more value. Um, and so we'll talk about a little bit about how the buying process works. The most important, part is how you're going to buy. And there's lots of different ways, whether it's buying in cash or using a mortgage. And Lindsay's going to talk about the first step is it's always good to get a pre-approval so you know what you can afford, how much you want to put down. And in this market, because it's so competitive, when you're making an offer, sellers will ask to see either a proof of funds, so meaning you could pay for the entire house in cash, or a pre-approval letter. And that's where Lindsay comes in. So Lindsay's going to talk about what it looks like to get a pre-approval, what happens, what kind of information they request, how long it takes, and then we'll move from there.
Sure. So we operate a little bit differently than a lot of other banks. There's a very standardized process when it comes to pre-approval letters where you can go to any bank, you can enter in your name, social security number, your income for your current income, and they'll spit you out a pre-approval letter. In our experience, especially when you're in a competitive market, and as Megan can speak to, having the confidence, when you find a house that you love, you don't want any hiccups down the road. You want to know that this is in your budget, this is going to work for you, and you don't have to worry about your financing. So the process that we take is to do a lot more due diligence up front. We can still do that within 24, 48-hour period, but pre-approval letters are also good for 6 months. And then at the 6-month period, you will need maybe a quick refresh. We might have to repull your credit, maybe get some updated financials from you, but for the most part, it's kind of a rolling pre-approval. So if you're even considering it, and if you really want to go look at properties, we really recommend you just going through the process as early as possible. So we can kind of customize how much you want to give us at that time, depending on your time frame. Because if you are really just very early on in the stage, you're not going to want to give me 50 different documents depending on your profile. So some people are quick, easy underwrites. If you just are a W-2 employee, you have a salary bonus, it's a very quick turnaround. If you have a more complex balance sheet, you own a lot of real estate, you have a lot of K-1s, There's a lot of factors that go into qualifying income that many people don't realize. And when all of a sudden you get to the point where you found the home and all of a sudden you're providing those documents and your qualifying income isn't what it was expected to be, it can be a bit of a shock. So depending on your balance sheet, your profile, we can go through, say, okay, I need these documents at this time to kind of say, I can give you a high level of confidence. Or you can give me everything and I can give you a very solid level of confidence that assuming nothing changes between now and the purchase, you're good to buy that home at the level we discussed. And
Actually,
one other
Lindsay,
thing to note.
can I ask you a question? Like if a seller is looking at a couple of offers, like Megan comes in with her her client's offer on a house, are there pre-approvals that can be better or worse? Like, can one pre-approval look like, is there a way to get a better run, or does everybody sort of come with a pre-approval?
So it's really unfortunately only based on reputation. And it's something that the bank has to build that reputation out, and we're working to build out that because again, there's are the ones where you can kind of just get the cookie cutter pre-approval. They unfortunately all kind of look the same, but there's the reputation out there that it's like we've done the work behind it and we know that, our letters are out there, and it's like when we give a letter, that person's good to go versus just doing kind of, but it's also for the buyer. It's really for the buyer's comfort to be, but for our reputation to build, we're hoping to get to that point where, yes, that when they see our brand on a letter, they're like, okay, this one's ready to go. We know that they're going to be a solid, like they've talked to their bank, they're ready. There's going to be no issues down the line in terms of the financing.
And then,
but unfortunately,
oh, I have a question
ahead, yeah.
too. So, Lindsay, your pre-approvals are fully underwritten, which means because you've done the legwork, they've submitted all of their financial requirements. Those are pre-approval, and those are generally just conditional on an appraisal. Is that correct?
So yes, technically, technically there's a difference between a pre-approval letter and a commitment letter. So there's two stages of the process. We do spend a lot more time on those pre-approval letters that we can flip it more or less to a commitment letter very quickly if needed. So it really depends. Every scenario is unique, but for the preliminary shopping, it would just be the pre-approval letter. But essentially, you have basically the commitment letter, and yes, it would just be the matter of formally submitting the file, getting an appraisal completed, and then you're kind of checking the last few boxes, maybe some updated statements, an updated pay stub. Again, it really depends on how much we have up front. Some clients don't like to give a lot up front, so I can't say that every pre-approval is going to be at the point where it's like, we just need an appraisal. But it really depends on how much we get up front, and we have those conversations with the clients to say, you're good to go. Because that leads to my next point, where in a lot of situations, which I'm sure, Megan, you deal with often, is kind of the cash offers versus the mortgage, right? A lot of buyers in this market, or a lot of sellers in this market want to see the cash offer. That doesn't mean you can't have a mortgage. So a lot of times it just means that you're not going to have a mortgage contingency. Right. So in those scenarios, a lot of times we will even do more work. We'll get to the point, if you're going to be going out and having to do cash offers, then I recommend doing really a lot of due diligence. We go to our credit team, we say they're going to sign no contingencies. Like, we have to be very confident that this is like good to go. And so we do an extra kind of critical look at it, and then also get to kind of the point where it's like, all we need is the appraisal. Everything else is going to come in clean. They're good to go in terms of being able to offer all cash. We can still close with the mortgage on the day of the closing. It doesn't matter to the seller. They're getting their money, but they just don't have to worry about you being like, oh, I can't get a mortgage. I don't have to buy this house anymore.
No, that's great. And then typically from the time that they engage with you to the time you're able to get the commitment and close, what is that time frame?
I would say the average time would be 30 days.
Okay.
We can adjust that accordingly based on the scenario. Again, if we have a lot of the documents already, typically appraisals take about 2 weeks. We can always order a rush appraisal. And then once we have the appraisal, it's just a matter of kind of finalizing, getting the title orders in, working with the attorneys. But I would say the most standard turnaround time is 30 days. If there's some sort of rush, we do our best to accommodate. There's a lot of times now, another scenario that's coming up often is the delayed financing, which we can also do. It's just a matter where you use investment proceeds to buy the house in all cash and then come to us for the mortgage after the fact. There can be some tax benefits that you can talk to your accountant about that. So there's a lot of scenarios. So depending on the scenario, but 30 days would be the minimum average, I would say. But again, there's certain scenarios where it's like, we got to buy this in 21 days or whatever it may be, and we will do our best to accommodate.
Okay, great. That's super helpful.
And I think, so that's mostly, again, it's just to give you a quick rundown of documents. Standard documents are a couple of years of tax returns, usually 2 years of tax returns, recent pay stubs, depending on where we fall in the year. So right now, obviously it's January, no one's going to have their 2025 tax returns ready. So we'll need something verifying 2025 income. It really just depends where you fall in the year. Asset statements, brokerage, bank, and retirement statements are really the standard things. If you own other properties, you'll need to have the mortgage statements, tax and insurance payments on those properties available. And then if you are a K-1 employee or you receive a lot of K-1s, we would need all the K-1s just because there's information on those that isn't available on the tax returns. And so we take a look at the few documents, go through it, come back with questions, but usually most pre-approvals we can have done within 48 hours.
Okay. That's great. And we'll wait, and if there's any questions at the end, we'll ask. But the next step is kind of connecting with an agent. Depending on where you're looking, I'd love to have a call and we can kind of talk through what you're looking for, what suburbs you are thinking about, what's important to you. Is it walkability? Is it land? Is it having a pool? Is it your school system that you're going into? What suburb really makes sense? How close do you need to be to the train? Are you commuting in 1 day, 3 days, 5 days? All of those things we'll take a look at, and we'll help you kind of, narrow it down if you're not already interested in any particular town. And then from there, we'll work on doing a search. We'll put together a search. We'll talk about listings that are both on the market and that are available off market. A lot of homes in the suburbs do trade off market and have never been listed. So if you're just looking at Zillow and not working with an agent, it's probably not your best bet. Just for an example, last year in 2025, 41% of my transactions were actually off market. And this year, of the 6 or 7 that I have closing, I think 5 are off market and have never been listed. So it's really important to, when you're ready, to not just rely on Zillow, to find an agent that you can work with, that you're excited about working with, and take it from there. So we'll, start to look at homes. I'll send you listings, or your agent will send you listings. We'll narrow it down to towns. It's always helpful to come when you are thinking about a town, is to do a town tour where you'll go through Rye or Greenwich or Darien or Scarsdale or whatever town you're thinking about. Do a tour, stop at the local coffee shops, figure out the different neighborhoods. How close are they to the train? How close are they to the highway? Is it easy to get to your family that's nearby? And then, we'll start to look at homes. And what's that look like? We'll see homes that are both on and off market. If you decide that you want to make one, then that's kind of when it becomes important to work with the right agent. So you make an offer, and that offer generally includes your pre-approval letter or your proof of funds. It includes an attorney. It includes your offer number. And in that terms, we'll look at all the comparable sales, similar homes that have sold. So we'll make sure that, you're comfortable with the number that we offer. We'll see, in making our offer, we'll look at the days on market, how many other homes are there. And in the suburbs right now, the spring market is just starting. And the first couple of weeks of the spring market, you'll see a lot of bidding wars. And so sometimes, the asking price is really just the starting point. Several homes recently, one went on the market and is going to trade over $1 million more with 11 offers. So that comes to the next point in thinking of your terms. It's really important to have strong terms and have an understanding of what the seller wants. Does the seller want a long close? Does the seller want to stay in the home after close and lease back? Does the seller, is price most important, or is closing day most important? And then we'll look at, as Lindsay mentioned, having your pre-approval is great. Generally, to a seller, as long as there is no mortgage contingency on your offer, they are generally agnostic whether it's all cash or that you're getting a mortgage, as long as there's no contingency. A contingency means that you have probably not done all the legwork to obtain a pre-approval. So you are making an offer that is contingent on you getting a mortgage. In the event that you do not get a mortgage, then you do not have to proceed with the contract. Or you're not able to you would not need to concede with the contract. And that makes your offer to a seller less desirable. Another contingency that we work with is an inspection contingency. That means that you are going to inspect the home, which I fully think that you should in every house. I do not think, unless you're tearing it down, that you should ever waive an inspection. But there's an inspection for informational purposes only, which means that to the extent that you find something wrong with the house, you will not renegotiate the purchase price that you've agreed on. Then there's the inspection contingency, that if you find something that you do not like in the house, you can ask, theoretically, if, you find that the air conditioners are broken or things need to be fixed or the radon is high, whatever it may be, you can ask them either for a credit or to fix. And those things are included in the terms as well. So in the terms, it's going to be the offer. Is there a mortgage contingency? Is there an inspection contingency? And is there an appraisal contingency? An appraisal contingency would mean that if the amount that you are paying does not match the amount of the appraisal, you theoretically could renegotiate. Again, in this market, since it's so competitive, we have not seen appraisal contingencies, but those are all types of things that we've seen in this market. And so if the seller accepts your offer, things move quickly. You should expect within 3 days to 4 days to have an inspection complete, have met or spoken to your attorney, and have contracts signed. It's a really quick process. We've seen this process happen in 12 hours, 24 hours, 48 hours, but generally within 3 to 4 days after an accepted offer, you should expect to have your contract signed. So it's quick and it happens fast, and it's just a crazy market that we're still in. You walk into a house for 30 minutes and you're expected to make an offer on one of your biggest investments. But that being said, so once your offer is accepted, you'll connect with your attorney. The seller is who provides the contract for your attorney to review. And during that time, while you're reviewing the contract, generally on the first day or the second day after the accepted offer, you'll do your inspection. If you're okay with the inspection, you'll sign the contract, you'll put down your earnest money or your escrow money, and it's generally held with the seller's attorney. It's also generally 10%. During that time, your attorney is going to do a title search. Your lender is going to do the final underwriting. And then next on the docket is you'll work on your homeowners insurance. And that's where Julianna is going to come in.
Hi. And so I should say one of the things that's interesting in this hot market, Megan, is that you may put an offer in. So say you put in an offer of, the house is listed at 4, it goes for 4.9. Okay, great. insurance is actually has nothing to do with the market value. It's actually just the cost to rebuild the house that's on the land. So it would be the same whether it was near the water or not. And so our job is just to make sure that we bring value. I think insurance has gone up. Blame Florida and California maybe, but I think our perspective is just bring good value. And so, whoever you work with, you want to have a broker that's going to give you a number of options for different carriers. And then sometimes they want to look at potentially your car insurance or another other lines of insurance. And so we'll just get the listing. We want to make sure we get the mortgage info because sometimes the bank pays your mortgage actually.
Yep.
So we just want to get everything done so that when you have the close, you actually just have a piece of paper that says this house is insured. It's a very smooth close. So we all really work in tandem as a team to make sure that that close goes really smoothly. And then there's a couple of things. There's just sort of some carriers are called direct writers, and they're just like kind of the ads you see on TV, and they may not provide as good quality kind of insurance. Whereas when you're buying a beautiful home that has like crown moldings and things like that, you might want to end up getting better coverage to, if there's a pipe that bursts or something like that. And then I'm a big fan of just you get insurance credits. So we'll say things like, are there water loss devices? Is there an alarm? And typically a lot of those things are there. But if they're not, they're just good things to have. And then once it's insured, sometimes once you take ownership after close, you can put those devices in. And lately they've just become really popular because water loss in older homes, it's a very common cause of loss. And then, of course, we'll ask things like, maybe it's in a flood zone, maybe it's not in a flood zone. So we'll make sure you just button all those things up and get that kind of insurance, or at least you can see it. And a lot of the clients that at least half of them are people who have moved out of the city from an apartment. It's the first time they've really owned a house. And houses are a little bit different than a condo or a co-op. And so we just go over that. And so there might be, for example, like a separate garage, and we just make sure, or like a beautiful stone wall or things like that. And then there's a pool. And so we just go over that based on the listing. Maybe there's a home theater or something like that, just to make sure that all of those things are properly covered. And then we work with, different kinds of deductibles, and show you all of those and then make sure. And that's usually like, I would say it's about a 2-week turnaround from most of the carriers now, maybe 2 to 3. So I've never really, but I have done a week. And so I would just say that carriers want sometimes 2 weeks now to make sure they understand the risk. If it's on the coast, you might want to make sure you have, it might be more expensive to get the insurance if because they're just closer, and there could be a storm surge or things like that. But the market has expanded tremendously so that there's plenty of options for the market to get the right insurance. And then we kind of make a proposal. It kind of looks like a menu from a restaurant. You say, I'd like this, and I want this deductible. And yes, yes, I want flood. No, I don't want flood. And then we put it together, we present it so that you have everything ready to go for the close.
Okay, great. Great. And then what are things that people should think about when looking at properties?
So I definitely would say, if it's in a flood zone, you're going to want to just make sure that you have, that you think about flood insurance, of course. If you don't have flood insurance, then the only thing that's covered is if really a pipe bursts in your house. So one of the things that's kind of quirky is if it snows 12 inches and there's a very quick snow melt and the snow seeps in, that's kind of considered like a body of water that enters your home, and that would be flood. So it's typically we're just saying it's something that you may want to get, and you can buy it. You could buy $250,000 of flood. You can buy $500,000. So you can buy all these limits. But I would say carriers are looking now more at roofs. So if the roof is really old, they may say, "Hey, we're just going to want to make sure that you fix it up or patch it up." And so roofs are becoming popular. And so I would say, also going forward, for at least in Florida right now, they're going to be giving credits, rate reductions on new builds. And so I think that's going to be a trend that may come up where if a house is a new build and it has been built with um, like storm windows, hurricane windows, things like that, that you'll see better rates than if it's a house from 1905, because it's inherently more fragile. One could argue whether old pipes are stronger than new pipes. I don't know, metal versus plastic or what have you. But those are just things. And then once you get the insurance, the carriers come and inspect it, and I typically can often go and meet them. They come and look at the house and just make sure that it's covered. And then say you buy that house and you bought it for four, it was listed for four, it costs 4.9, but actually to rebuild that, it's on the water hypothetically, so you're part of to actually rebuild that actual property might be only 2.5 million. And so one of the things that the carriers do is it doesn't matter if it costs more, they'll cover 2.5 or like whatever it takes to rebuild. And so those are kind of like the nooks and crannies of better carriers will say, whatever, if there's damage, like we'll give you a replacement cost. Say there's some sort of storm and the water enters your house and you have a sofa that 5 years ago was $5,000. Going and replacing that sofa today might be $7,000. And so you kind of get that what we call replacement cost. It takes into account inflation. And so that's something that you want to make sure. But then I have some people that feel like the replacement cost on their house is incredibly high. And they say, wow, our house could never cost that much. And so having a really good relationship with carriers to say, this feels high. It's important for your broker to have that, because they're supposed to negotiate so that you get value. So we're not afraid to negotiate on behalf of our clients.
Okay, and then lastly, before we kind of wrap up, can you talk about some of the other things in homeowners insurance just a little bit more, like your jewelry, your fine
Oh,
art,
sure. Sure.
handguns, cars, boats,
Sure.
kind of
So
how that looks
typically,
and,
right.
and cars, and if there's any sort of discount, or is it better to bundle, or how
Sure.
do you guys think about that when bringing on new clients?
So we have access, and I hate saying these words, but it's kind of like the high net worth. I would say anything that costs over $1 million to rebuild that is an A-rated carrier are the carriers that we represent. And the reason you want a rated carrier is if there is a big storm, whatever, in 20 years across Connecticut, you're going to want to make sure that they're really able to pay claims. So why would you buy from an insurer that is like a B rating? It's kind of like you think you're getting a deal, but you want to make sure that carrier can pay when you do have a claim. And so they typically, these carriers that we represent, they want to see 3 out of 4 lines of insurance. And so sometimes we put in the other lines. So it's your home, and that includes your contents, or if you shook your house, kind of everything that would fall out from,
Okay.
your kids' toys to your makeup, to sofas. And so we make sure that we cover the contents, and then of that property. And I would say just like a garage or a pool house would fall into that. Then there's cars, jewelry and fine arts is the third, and the fourth is liability. And I just think that if you're moving out of the city for purposes of, you need more space, you have family, whether you have a nanny driving a car or your teenager is driving a car, just having an umbrella program over your car and your home is something that it's not super expensive, but you want to make sure that you have liability because you might be in the city working and then suddenly your nanny says, or the 16-year-old babysitter says, like, I got in a car accident. And those are the kind of things that you just want to make sure you're covered for. And so we are the kind of firm that really speak to lifestyle. And it's not that difficult to do, but I think it's not just about, hi, can we sell you the most expensive policy for your house? It's how can we make you feel good about covering all your risks? And so, yeah, so sometimes we do the cars, sometimes we don't. It depends on, if it's expensive or not expensive. Connecticut's a pretty reasonable state, and they will give you a credit on your home if you obviously have all of your insurance with them. So, sometimes people come to us and they have jewelry. Sometimes they have very little, but we'll say, get this $200 policy because then you're going to get a credit on your home that offsets, like, then you get $500 off the home. So we kind of want to make sure that people are getting the most value out of their insurance policy. And hopefully we never have to talk to you, but we have a huge claims team and things do happen. And so when you do talk with an insurance broker, what's the process? Who are you going to be talking to? And so we have a lot of infrastructure around that, including a risk management team. And we can talk to them about everything from, one of the things I didn't bring up was construction. So sometimes people buy a house, they want to make it their own. Are you going to be doing a little bit or are you going to be doing a lot of construction? And that's something else because if you have a standard homeowners policy and you do a massive renovation, that is not covered under a traditional homeowners policy. So that's something to keep in mind. You get a course of construction policy. So we just make sure everything is smooth. And we like to just be your outsourced risk advisor.
Okay, perfect. That's great. So I think we're all set here and we kind of covered everything about thinking about moving to the suburbs. We'll be in touch. And if you have any questions before then, we're all three available. So I'll follow up with everyone with everyone's contact details and we'll take it from there.
Thank you
Thanks,
so
Meg.
much, Megan and Lindsay. Thanks to everyone for making the time.
Thank you.
Perfect.